A man becomes wise when he learns to filter the signal from the noise, the truth from lies, and the diamond from the dirt. My friends, that's what we use these charts for every day. The lessons you learn here, you can apply to your favorite ETFs, your favorite stocks when they are actually chartable. And how do you know if something is chartable? That means that you backtrack it. You go back in the past and you look and see how accurate your weekly vertical crossovers are, your 2-day recrosses, and you figure out if it is something that is chartable. Now, you'll find that certain stocks in certain time periods of the year, maybe in the fall-winter trading zone, are chartable, and in the summertime trading zone, they aren't. So there can be times when the charts work for certain stocks or ETFs and other times when they don't. How do you know that? How do you learn that? You go back in time. That's what our charts allow you to do. We, of course, use TC2000, which is the paid version of freestockcharts.com. And if you go subscribe, you'll see a link in the show notes, and you'll see a $25 off code that you can use. The beautiful thing about it is they have their own brokerage service when you get good enough to actually start using real money. They also, in the meantime, what we urge you to do is use the paper trading platform that comes for free with your subscription, and you can practice trade and see how good you actually are. Then when you start getting good at it, you start feeling confident, then you challenge your confidence by actually doing some small real money trades, such as a fractional trade of maybe $100 instead of risking $422 on the S&P 500 with one share. You buy a fractional share. There's plenty of brokerages that allow you to do that. And then you can practice and see, hold yourself truly accountable, because then you'll be able to easily see how much you made or lost, what percentage your gain or loss was. If you're out there with one small option contract or with a fractional share of $100, or if you're trading less expensive stocks, a share or two, keeping the price low, seeing if you're actually as good as your paper trading leads you to believe you are. And the interesting thing is, my friends, the dollars never lie. Now, let's jump into these charts and see what's going on. First, Bitcoin rebounding. Now, you can look and see that it's still heading down, still lots of downward pressure. As far as the price percent oscillator goes, derivative oscillators flattening out a little bit. That's good to see. But of course, we did fall off the deep end from where things had stopped at about the $36,600 mark. And of course, during the course of the week, hit a low of $31,000, closed for the day at $35,560.65, something like that. Now, wait a second. That's, well, we'll check as we move through that. But somewhere around there, Bitcoin was up for the day a little bit more, 5.87%. Look at this 2-day chart. Now, again, you can see at that $36,600 mark or so where it popped over on that last completed 2-day candle representing Tuesday and Wednesday. And then we have almost a doji right now. Again, indecision, tending up a little bit. Price percent oscillator, however, is still negative. It is flat. Derivative oscillator losing downward momentum. You can see where the half-day chart had crossed over and then rebounded in the morning. Was that? Yep, in the morning during the day on Thursday. So again, that's nice to see. What does that mean? Well, it doesn't mean everything's great now. It just means that the half-day chart is trying to recover some. Still downward pressure on that weekly and the 2-day, most importantly, the weekly. So if you're interested in Bitcoin, continue to pay attention. We urge you to practice trade it whenever that opportunity presents itself to you. The only way you're going to learn about how to trade Bitcoin is to practice trade Bitcoin and to see if you can actually do it. And as a matter of fact, if you backtrack on our charts, you'll see they're pretty darn good for Bitcoin. Now let's jump into the S&P 500. Still negative on the price percent oscillator, is ticking up for the day 0.46%. trying to keep ticking up a little higher. Derivative oscillator still losing momentum. Price percent oscillator still negative. 2-day chart. Little more than flat right now, still negative. Derivative oscillator, this is just the first day of the latest 2-day candle. Derivative oscillator is gaining some momentum. It is green now, so we'll wait and see just where things are going. Again, until we have this 2-day crossover going up, we can't have a recross, so we'd like to see that. And maybe this market's just going to keep on booming as they keep making money up out of thin air. And if that happens, then of course we'll be waiting for a weekly vertical crossover at some point. No matter how crazy that might seem, remember, it's not crazy if the charts are doing it. It might feel crazy, but it's not. Remember after the COVID crash? Remember that? And what happened? The market zoomed, leveled out, zoomed again, leveled out, zoomed again. It's wild. It's a wild ride, my friends. When we look at the half-day chart, what do we see? It had crossed over going down and then popped back over going up in the morning on Thursday. So we shall yet again redraw that trend line. That's where we are on the S&P. Let's go to the Nasdaq 100. What do we see there? Well, the Nasdaq 100 boomed up for the day. It was up over 8%, 1.04. When we look at it, we can see the high on the Nasdaq 100 at 340.46. Where had it been previously? 342.80. So we're not hitting a higher high yet on the Qs, again, which represents the Nasdaq. Those are the tech stocks. Derivative oscillator still negative. Price percent oscillator still negative. We go to the 2-day chart. We've already had that 2-day crossover going up back on the 2-day candle ending Monday, the 7th of June. And of course, we've seen throughout the course of the week as things have moved up, price percent oscillator pulling away from the red signal line, derivative oscillator gaining upward momentum. What do we see on that 2-day chart? It had sort of leveled out and then popped up in the morning, higher in the afternoon. So again, let's redraw that trend line and see if we can capture, yeah, there we go, 4 candles, almost 5 that we've captured there. Again, trend lines, you always want to have at least 3 candles. It's like you can always draw a trend line with 2 candles. It doesn't necessarily mean anything. More candles you can get in there, the nicer it is, the cleaner it is, and of course, the more that you can rely on it. Now, I was thinking about trend lines, and we haven't pushed that training lately. I'm going to put at the end of today's video both of our trainings. We have 2 good trainings, part 1 and part 2, on trend lines. We use trend lines a lot. I've said in the past that if I had nothing but a simple tool, what would that be besides candlesticks? Now, a tool, not necessarily an indicator. A tool, it would be trend lines. Trend lines are very, very helpful. You want that training? Look at the end of today's video. Also, the training that we have for subscribers, and you can go to chartingwealth.com and sign up for free. The subscriber training is on profit and loss bands. It's actually entitled The Secret of Profit and Loss Bands. Those are horizontal bands that you set up before you enter a trade, where when you hit the loss level, you pull your trade when you hit that band. That is, it hasn't worked and you get out. Your profit band or bands, you may bifurcate or trifurcate your profits. When it hits certain levels, you might sell half, you might sell a third. Then it hits another level, you sell out the rest, or you sell the second third, and then it hits the third level, you sell the third third. So you can do that however you want. But again, you're basing that on your experience as you garner it and as you move through time. That's where we are on the Qs. Let's keep pushing through these charts. Let's go to bonds. Bonds up again, 0.60%. Check it out on the weekly chart as bonds continue to try to move up. Derivative oscillator gaining upward momentum. Price percent oscillator pulling away from the red signal line. Bonds started off awfully slow, didn't they? Started off the crossover back on Friday the 30th. They went sideways for a week, down for 2 weeks, and over the course of the last going on 3 weeks now, they have been edging up, edging up, edging up. It is nice to see. What do we see on the first day of the latest 2-day candle? A nice big green up candle. Good to see that forming. Derivative oscillator heading up. Price percent oscillator, hockey sticking up sort of for us. That's good. What do we see on the half-day chart? We can see where it's gone up again, gone up, slid sideways, gone up, slid sideways, gone up, slid sideways, and up. So again, it's doing it in sort of, again, stuttered fashion, but that's fine. It's still going up. Let's see if we can redraw maybe a better trend line here. Yeah, that's better on the half-day chart. That's where we are, folks. On bonds, lastly, we go to gold. Gold up again today, 0.43%. Now, as we look at this week, we can see after 5 weeks, particularly 4 weeks of strong up movement, gold has been sliding sideways. This is a weak week. How is that? We have a red open box candle. It's not a solid red down candle. It's a slow down one that is really noticed in our Heiken Ashi candlesticks by going from green to red, but it's not a solid red. We look how the price percent oscillator also is weakened and derivative oscillators lost a little bit of energy. Look at that 2-day chart. That's where we can really see that sideways slide. So far we have a spinning top, almost a doji forming. And look at that. It's dropped right below that weekly trend line. Again, hasn't crossed over going down on that 2-day chart, but getting close. It's the first day of the latest 2-day candle. We'll see what happens on Friday. We can see where the derivative oscillator's already gone negative. We go to the half-day chart. What do we see there? It is still negative as far as the price percent oscillator goes, and the derivative oscillator losing downward momentum on that derivative oscillator. Price percent oscillator is a little more than flat. Again, at the end of the day, that's where we saw that pop up. So that's where we are on gold. It's where we are on all of our charts. We so appreciate you being with us. Remember what happens tomorrow at the close of the market on Friday. We record our weekly review and forecast. For that, you use our weekly market worksheet. Remember, those worksheets are in your show notes every day if you're a subscriber. The PDFs are there for free. Plus, we have great trainings on how to fill out those worksheets, the daily market worksheet, the weekly market worksheet, and every time you do a trade, the practice trade worksheet. And again, that practice trade worksheet is so important. That is where you actually note the lessons you're learning during the trade. Things that are working, things that aren't working, what you're relying on. It becomes probably the most valuable pieces of paper in your trader's almanac. You want to do that every time. You want to keep those trade worksheets and you want to learn from them. My friends, thank you so much for being with us. God bless. All the best from the whole team at Charting Wealth World Headquarters.